and welcome to this very special presentation on timing your entry. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I am delighted to be your host for this presentation. You know, with both the massive sell-off from the coronavirus pandemic and the recent three-day sharp rise in many of the global markets, you might be left scratching your head like many others, wondering if now is the time to start buying stocks again. Well, this presentation is aimed at delivering the answer. Let's take a look at some quick excerpts from last Friday's VectorVest views, as it will begin to point us in the right direction, and we plan to build upon that guidance in this presentation. So first and foremost, the main message, of course, was be patient. But when we dig into the contents of the essay, some things might have been eye-catching as you read through all of the content there. First being, also, this sell-off has created extremely attractive buying opportunities. And I think we've begun to see some of that even with companies in turmoil such as Boeing, and others that have really begun to start to skyrocket according to the amount that the stock prices had fallen during the pandemic, if nothing else. And so this is, of course, very true. There is some tremendous buying opportunities out there right now, but knowing that, we need to still take a very tactical approach in timing our entry. And so we began to detail that in the very same newsletter. It says here, when the primary wave turns up, we'll need to see follow through with an explosive up move. If you're more prudent, wait for a green light in the price column of the color guard. And so perfect, we're getting some clear guidance here on what to look for. And what we're really saying here, guys, timing is a function of temperament. And here's what you got to really look for. Okay, so if you're an aggressive investor or trader, when we say the primary wave is up and the explosive day, we actually saw that day this week. And so part of this presentation will be detailing that and also taking a look back historically and showing how important, this type of tactic can really be for you and really produce some extreme profit potential when you do it to the letter of the law. We'll also then take a look from more of a prudent investor standpoint in waiting for the green light and follow through in the following session before we get to a point where we want to start participating in any market rally. Finally, if capital preservation is of the utmost importance to you, then you're certainly more of a conservative investor, and then you would more closely follow the confirmed call, still waiting for that follow through, but having a lot of comfort in knowing, hey, you know what, this is the final signal that we're going to receive saying it's okay to start looking at buying stocks again. And so the market will have had to heal up a great amount in order for that to occur. And there's a lot more confidence that the market is really moving your direction enough now to where it warrants attention. So all of these tactics are extremely good in their own right, provided that you don't mix that up as far as temperament is concerned. So let's get into it. Best thing to do is take a look at all this visually and see what we can learn from that experience. So let's take a peek. So here we are at the homepage for VectorVest, and the best place to dissect that guidance and take a look at how important it can really be for you is to take a look at the market timing graph. And fortunately here at VectorVest, we have some history, and we've been doing this for an awful long time. We're only going to take a look at one or two different time frames here, but just know if you go back and analyze it more and more, the more confidence you might gain from what we're going to be talking about here today. Let me get right to it. I'm going to go right up here to the Graphs tab. And from the Graphs tab, I have a couple of graphs here already loaded up for us. So the way to access the graph that I have, though, on the Graphs tab is simply go up to the timing or to the graph selector box up here in the top left, and I simply chose market timing. Okay. Now, when you get there, I did zoom in a little bit so everybody can see things a little bit more clearly. Certainly, I don't think anybody needs to be aware that the markets have really taken a beating here as the pandemic has kind of gone and really affected the market. It Here you can see that 3 sharp day rally towards the end of the graph. And this is where people begin to start asking questions. Has the market hit a bottom, and should I be buying stocks? Let's take a look historically, then we'll come back and paint the picture on a current basis as well. So I have another graph that I'm going to reference, and it's the same market timing graph. I've just gone back to 2018. Many of you may have forgotten, but there was also a fairly significant market retreat followed by an extremely good run in the stock market that started the day after Christmas of 2018. On the graph on the top, the candlesticks running through the chart are on what we call the VectorVest composite, which is an arithmetic average index price of the over 8,000 stocks that we track. Okay. What that allows us to do then is analyze market trend, market direction, market movement. And then it allows us to place signal according to those market directions. None of this is prediction. It's a function of analyzing price direction and trend. Okay, so first things first, what I have displayed here, you might see these little triangles, the green and say the red. Each one of those is placed on the chart because down here at the bottom I have already selected primary wave to kind of begin the discussion there. The first place that I want to begin in discussing the primary wave is that, remember, it's best suited for the aggressive investor or trader. What it does is it looks for early indications that market is changing direction. Very early, the earliest indicator that we're willing to put out there to the public. The advantage is it typically nails very closely market tops and market bottoms. The rub is when you get in a strongly trending market, it can fluctuate back and forth a little bit based upon volatility. But remember, this is aimed at timing our entries, and it does a terrific job at getting you on the right side of the market actually most of the time. We can see here at the top, we had a down signal on 9/26 and the market fell. There was enough action to quickly produce a green triangle indicating the primary wave has turned to up, in which case we might look for follow through the next day. Do we have follow through the next day? No, we do not. So we should not have purchased stocks on that signal. And then we resume the down signal. Here we come to another green arrow, and when you look up at corresponding price action, here you do have follow through, and that would have produced opportunity to make money as the market continued, if only for a little while. Okay. Then the market switched gear, and you had a down signal, and then here we go again. And this was a very short-lived signal. But again, for an aggressive investor or trader, that's all they really need to make their mark, to get their gains. And they have the tactics and things, to mitigate against a change in signal that might occur quickly, right? Then again, you have another primary wave down that eventually leads to an up off of a bottom. And so many of you are asking the question now, as an aggressive investor or trader, can I be buying stocks? And the answer to that question is yes, you could have already been buying stocks. Again, we'll look at that here in a bit because I want to stay focused on this chart. Does it mean that the market is going to continue to run like we have in this picture here? I'm not so sure, right? But what we do as aggressive investors or traders is we purely follow signal. So it doesn't matter whether that's true or not. If the market does reverse course quickly, the primary wave will get us out quickly, and the other money management tactics that we establish will persevere through that action, right? But what I'm hopefully detailing quite well is that it does a really good job at trying to do the best job possible of nailing the turning point and not being so close to the turning point sometimes that you're more susceptible to false signal. And that is a combination that's really hard to achieve, and yet VectorVest does it extraordinarily well, as you can see in this graphic. Okay? You might say, well, when you get into these situations where the market turns down and then turns back up, for an aggressive investor or trader, we're okay with that. We simply, even if we exited our campaign, we simply buy stocks again, realizing, hey, the market's turning back up again, Whereas if you're a long-term investor, then you can see why this might be a little quick for you. So whether you knew it or not, you already made that decision for yourself. All right, now, to move from there, I'm going to go to the prudent actions, which again, we're to look for a green light in the price column with follow through the following session. Okay, so first things first, where can we find the price column? If I go back to the home page, we're talking about this column right here in the color guard, in which case we did have a green light yesterday. What we have yet to see is follow through today. Okay, so at this point, prudent investors still are taking no action, but you're kind of in that mode of, I don't want to say licking your chops, but you're waiting for some resumption of that signal in order to even consider buying stocks at this time. Okay, and so you can see the distinctions here. The primary wave turned up, of course, the day before, and you had the explosive day and the follow through on the day of the green light, and there was money to be made on that day, let me tell you. And I'm actually going to show you, okay? But that was for people that are willing to assume more risk by jumping in a bit earlier. Okay, so there's always going to be a give and a take. Aggressive investors are really rewarded greatly when they get it right. But there's something to be said for knowing who you are, and am I that person? Am I willing to because things could have gone the other way, and I've got to be willing to take that risk. If I'm more prudent, we're still waiting. And if I'm conservative, boy, I got to tell you, we got a long ways to go until this buy-sell ratio, you see the number is 0.02. We got a long ways to go until that gets back above 1 to confirm 2 weeks of price direction. Now, I expect if that thing, when it really starts to move, it's going to start moving quick, when we start to get to that point. So you are going to want to watch it, but there's a long way to go. All right, let's go back to the graphs. So I'm going to go back up to Graphs tab. And on Graphs tab, what I do want to do is take that information I just shared with you and now allow you to see it visually over this same time frame from 2018. And I want to do that and make some very, very important points on some great tactics to do to coincide with those green lights. Okay, so let me go ahead and go to the bottom here. We're just going to change it to the green light buyer. Everybody should have this timing model within VectorVest. So you go to your market timing graph, and at the bottom you put on green light buyer. Okay, now when we do this, there's a couple of things to be aware of. We go to cash and it confirmed down. So here again, you're in a cash position as of the following day on 10/4, from 10/4. As the market falls, no green lights. Each one of these green triangles represent when the first green light is published after one has not been present, okay? And so this is the first green light after a confirmed down, which typically provide the most profit potential because price has gone much lower. And so what we coach people to do, of course, is look for follow through on the following day, which actually was achieved if you consider early market action follow through, and we say 10 o'clock, right? And so I believe that that was achieved the following session, just looking at the candles. The other thing that I want to bring to your attention right now, and it's going to become more evident as to why it's good coaching, is consider stepping into the market, because while it provides the most potential reward, the initial green light, the thing that typically runs hand in hand with that is it's also the riskiest green light, realizing that green lights aren't thought of to be risky and aren't, but there's a give and a take there. And so the coaching advice for those certainly that are on the very right edge of prudent, the most prudent of prudent, consider only buying a couple of stocks, and may be good for anyone right now, given all the uncertainty that is surrounding the markets. How long is coronavirus going to be around? How many times are we going to have to print more money, to persevere, and all of these different I don't want to go into the litany of them, right? So consider only stepping into the market, 1 or 2 positions a day. And I think that's very realistic. I wouldn't push it beyond 2, and 2 is very doable. And very seldom do a lot of us buy 10 stocks all at once until you get more comfortable with VectorVest to begin with. But just by only, say if you're going to even dollar weight, which you should, you're going to carry 10 to 20 positions. What we're saying here is we're only stepping in with at most, 20% of our capital, right? And then what we do is we wait for another green light with confirmation, which would have been here. And now we've got 4 positions, or about 40% at risk. Now the market doesn't really travel anywhere from there until we get here. We do not get follow through the next day, so we would not have picked up any additional risk by way of investments into new positions, right? The market did not go higher the day after this signal, so there's no follow through. So we still only have 40% risk. And oh, by the way, the market goes lower and gives us an even better buying opportunity with the capital that we still have set aside. And so now we pick up a couple of more positions. Notice here that you've got a string of days that are shaded green. That's because each one of those produced a green light. So there was 1, 2, 3, 4 days. The first 4 presented opportunities where the following session the market followed through. So we would be built up to a full basket of 10 stocks if that's what we were trying to achieve. And it wouldn't be all that much later that we would eventually fill out even a basket of 20 stocks. Okay. And so great tactic, because given the current market situation, we got earnings season coming around the corner. We got more jobless claims. We've got who knows what coming out of the capital, and so on and so forth. So this is aimed at helping you survive through what seems like is going to be some pretty wicked market volatility at times, here again in the future, and really get onto the other side of that and be able to capitalize on what I all at least hope we believe in, that markets years from now should be higher, if not much higher, than where we are, depending on certain things. I agree, but after all, I am an optimist. I'm not a Pollyanna, right? From what we know so far, that's what I've got to believe. Okay, so all that being said, this is a terrific tactic. The key again was wait for the green light in the price column of the color guard like we received yesterday. Don't buy stocks until the market goes higher, okay, the following day. And you would just reinstitute that approach. So in going back to the color guard quickly, we cannot have a green light today because we were working off a red light a week ago. Okay, we could still get the follow through that we're looking for. Okay, we cannot have a green light Monday, but we could Tuesday because we'll be working off a yellow again. So as early as Wednesday of next week on follow through, you could be looking to make new purchases, assuming that the green light was in fact achieved, right? So again, we need to see that green light, but just getting you prepared for the week ahead. And then if the markets for some reason continue to rally, right, we might see more and more green and more opportunity to step into the market next week. we may not see that at all. And in either way, this is looking out for you. Either we're going to be buying stocks because the market is in fact continuing to rise, or we're not going to be buying stocks at all because it's not. Okay? All right, now, final step. Let's go back to the timing graph. All right, so if I come down here, last final one was the confirm call. For those that are most conservative, and really paramount in your mind is, look, I've got my wealth. I'm concerned about putting it at risk. Preservation is most important to me. There's many different things to teach around that concept. Hopefully many of you are in the ultimate retirement solution. If you haven't, that's something you got to look up, because Jim could have showed you how you could have made your portfolio worry-free before the vast majority of all of this downside action occurred. Okay. And at the same time, once the market has moved up enough to where price of the composite goes higher for 2 consecutive weeks, okay, goes higher from the prior day, and the buy to sell ratio, which is now at 0.02, goes all the way above 1 to confirm that action, indicating broad market participation, it's at that point that you're going to come to the party. Okay. And again, that could be, you can see here off what was not nearly as bad of corrective action, that it took several weeks, for that to occur. So the most important thing, guys, here, and you can see all of those are good decisions, right? But the most important thing is knowing who you are and thereby how you're going to go about conducting your business. If you're aggressive, it would drive you nuts waiting this long to get an entry on the market. And so again, that's why we'll have the primary wave to get in here. Now, if you're conservative, you don't do that because you're going to be all worried about the next 3 days action and how the market's not really going anywhere yet. And I've got all this money that I'm concerned about preserving capital on, and that's where mistakes begin. Okay. So hopefully I've done a good job at really detailing all of this for you so that now, when we come back to the current situation, we'll start with the primary wave, the most aggressive. Your opportunity to really buy stocks was early in the day here on 326. Okay. This is assuming that you're not a Jockey Club member, you don't have the Derby and some other things where you could have really made some money even earlier than this. But just, from the base of VectorVest subscription, this was your day. And some of you may be really beginning to see the importance of real time. These are the times where real-time data becomes very, very nice to have if you don't have it, particularly if you're aggressive, okay? But there was money to be made here. We'll show you that. And then, we're not seeing a lot of continuation of that yet, but we might. One thing that might be of interest to you is when I get to the examples here in a bit, we've already could have taken profits on some trades because they went through the roof yesterday, So we're coping with that by risk management tactics. That comes next. All right, now with that, we can go to the bottom. And if I'm more prudent, then what I want to do is come in here to this market timing graph and click on green light buyer. And I want to wait for that green triangle that we got yesterday. I start thinking about the 2 positions that I'm going to buy tomorrow, but I only buy them if the market does follow through. So what is follow through? That means going higher than it was yesterday. We're not there yet, we're not there yet, but we might get there. Assuming we don't get follow through today, where you would want to consider picking up a couple of positions, your next day will be Wednesday of next week, So that's how this one works. And then with the confirmed call, we're going to be waiting a little while. Minimum of, probably a couple to a few weeks here, based upon what we see here so far. Now, stay tuned, and that's why we have things like the daily color guard report, because who knows? I mean, the market might just really begin to go on some kind of a terrific run, Having said all that, guys, I really hope you're starting to see value in the VectorVest subscription. And even for those of you that might be stumbling across VectorVest for the first time, this should be really eye-opening, because if you're following VectorVest the way you should, really the earliest you should have been buying stocks was yesterday, okay? And most of you aren't buying stocks at all yet. But that may be coming down the pipe, and we've showed you exactly when and where that would be. We also said best thing to do when you have uncertain markets like we have here now is don't miss the party, right? But don't rush to the table either. You don't have to be the first one there and just hope everybody else shows up. Get the message? I hope you do. All right, now with that, let's move on. So in terms of what to look for on the right kinds of stocks, best places to focus on finding the right stocks at the right time. For those that are on the more aggressive side, even into Prudent, I could show you where the bottom fishing searches are located, and you're still looking for some explosive action if you're going to participate in bottom fishing scans. Okay, so you'd want to not only be in a primary wave up, but you'd want explosive opens to be super interested in bottom fishing searches at this point. Okay, but I'll show you where they're located. I can also show you that some of those are actually blue chip type scans where you could afford to be a little bit more patient on them, okay, and not necessarily even need the explosiveness per se. You still want to see follow through, obviously. Okay, we'll also take a look at hot stocks from the daily color guard report and high safety stocks and searches. Okay, so let's go over and take a peek. All right, so first things first, we're going to go in order of aggressive to more and more conservative. I'm going to go to the Unisearch tab up here at the top. Over on the left, I'm going to categorize the search directory by folder so that I can go find searches bottom fishing. Here's a complete list of potential searches to run to find stocks that are best equipped to take advantage of sharp market rally days, days where the market is really blasting off, particularly the ones that are after the lower dollar kinds of stocks. Okay, so when we get there, you'll have the best of the best, which is Jailbreak. You can get in here, you can run the search, and it'll bring up some stocks for you. I can see many of these are 3-time leveraged funds, and some of them are having very explosive days, right? Not all of them, but remember, when we're aggressive, if our winners outpace our losers, that's what we're really after. Not even number of winning trades as much as our winners need to be big and enough to outpace any losers that we might have in the portfolio. And so you could see, it's picking on the kinds of stocks that would get you there. Then you'll have kind of the most conservative, let's just go there, would be one more like Blue Chip Bargains VST divided by RT. When we run that scan, you're going to have Delta Airlines, HIG, TT, DHI, Tesla, Facebook, and so on down the list here. So it's a much different caliber of stock. It's not a triple leveraged fund. Generally speaking, you've got some reasonable price points here if you're more on the prudent side of things and want to try to take advantage of some really bargain prices on some stocks. Okay, so I don't want to dive in and get all stuck in the search criteria and all of that. I'd more so just kind of identify things to consider, right? And so if I want to do some bottom fishing, want to do it in a more prudent way, something like Blue Chip Bargains can really do wonders for you. And then you kind of got searches that I would say fall in between. Any of the S&P 500 searches I've had good luck with, both S&P 500/RT and S&P 500 Stop Ascending. One common thing that I do want to point out, because it pertains directly to bottom fishing, is the RT part. the low RT. So what we do when we run a scan like S&P 500 divided by RT, remember RT is an indicator in VectorVest that deals with what we call relative timing, which inevitably is a function of price trend. It's the magnitude, dynamics, there's a lot to the indicator. It's a very complete indicator. But what it's doing is it's finding for you the stocks with the lowest RT values. And what that means as a function of what I just said is it's finding the blood. Warren Buffett's always said for years, right? Buy when blood is in the streets. Blood is in the streets on these companies. All of these bottom fishing searches are looking for blood in the streets. It's just what slice of the market do you want to consider? So this would be the S&P 500, more of a moderate approach, I would say. Right? And so you got Apache, Marathon Oil. Yeah, I saw some guys on CNBC talking about, are they going to be able to make it through, this kind of thing. So you're very much dealing with companies that have experienced a tremendous amount of blood, right? So that's that. The other thing I would say, as I'm going through these scans, and we've been seeing it now for a while, there's an awful lot of energy and more specifically petroleum. Don't ever unweight yourself and buy more than, say, at the most a couple of stocks, within the same industry. So if we scan out here to the right, look, petroleum, just pick one or two of those guys and then go down through the list, and pick some others. And you say, well, why would I buy that? Well, it's a total paradigm shift. These are actually the stocks like a Boeing, right? That went up, 90% off the lows? Right? And look at the kind of shape the business is in. Okay. Granted, they were kind of king of the hill and had some wherewithal to maybe push through these times, but you get the point. I mean, it's all a very similar story here. So I don't want to get too far into the weeds, more so just explain exactly what we're trying to accomplish for you by you getting in here and being able to run some of these different scans. Okay. But it'll put some great potential candidates at your fingertips, and if you're a bottom fisher, I'm going to show you here. Well, let's just show you now. I'm going to go to portfolios here quickly. And I did one for you just so that you could see some result kind of in real time. This would have been buying from a search in that folder that I was meaning to mention. It's kind of in the middle. Okay. Bottom fishing and rising industries. It tends to be one of the better searches in the bottom fishing scans, bottom in and bottom out, or at least market rally in and market rally out. I use that term bottom loosely in the current situation, right? But bottom fishing and rising industries is one of the better ones. Tends to be. Okay. Does that guarantee it's going to be one of the better ones in the future? No. But again, looking at game film is what coaches do, and they do it for a reason, right? So knowing some of the tendencies are very important. Nonetheless, you can see this is up 10.74% from just yesterday. It has given back 4.3% today, and there's only 3 stocks left because when I set this up, we used some important things to manage risk. First, we started with a 10-stock basket. Only 3 remain. So that means when I come up here to say reports and go to trade history, we had one. This is what aggressive investors thrive on. We had one NWHM take off like a rocket, and it went up 79%. But since the market hasn't really followed through in any meaningful way today, looks like we've piled up some losers here as well. But the winners are outpacing the losers, again, thereby allowing for profit here. When we go back to the list of stocks quickly, you can see we've got some pretty good winners in there, at least one or two right there with Goal and FLMN, right? And so they're carrying the basket. Now, the other thing that we did is we put a ProfitLocker on them. And ProfitLocker is something I'm going to get more into here in a little bit. But if I go to the bottom here and view ProfitLocker Pro Graph, essentially when we started the trade, which was right here with the green arrow, we knew the explosive day was here. Futures were up big, so on, etc. Limit up, I think, the night before. right? Markets took off like a bird, so too did this stock, until it stopped going up and started going down. So what ProfitLocker did is it trailed it up to profitability, flattened out to give you wiggle room, accelerated sharply as we got closer and closer to our target, inevitably knocking us out of the trade. Okay? And so that's how you get there. That's how you get there. Now, let me go back into the program here. And let's make sure that we cover all of our bases. So the next thing that might be worth considering, certainly for those that want to take more of the prudent to conservative approach, would be in Unisearch, focusing on scans like a safe and sound or high safety. Okay, so that in a way what we'll do is not only minimize risk by getting into the market a bit after the aggressive folks do, right, but also go with a higher caliber stock, because all the best bottom fishing opportunities by the time we get in typically have gone to the wayside. So we need to match that with stock selection standpoint. And so maybe a higher safety, more of a high growth type of a company is a better choice at that stage. So we can come into the directory and look for something like safe and sound. So safe and sound, instead of looking for stocks like bottom fishers do that have experienced the most pain, but that typically have some value to them, what we're doing is looking for the more resilient stocks here. And it's not so much that a lot of them couldn't have seen a lot of pain in this instance, but they've kind of got the financial wherewithal to best weather the storm. Okay, so you've got companies like AMD at this stage, eHealth, Old Dominion Freight, Teledyne, Universal, Lululemon, and so on down the list. And another great place to go, quite simply, is just Stock Viewer. Right here in Stock Viewer, you can sort the entire database of stocks, by safety. And of course, you're going to see some overlap with safe and sound here, but typically there can be some new ones in there as well. Another thing I don't think any of us should lose sight of, Dr. Delito put a very important watch list into the program not long ago. I think it was about March of maybe a year ago now, but I've been using it and really doing well with it myself. In the watch list viewer, you'll have an overview watch list section, and in there the 5G stocks. And you're starting to hear that 5G tone emanating from a lot of the TV personalities and other things. The nice thing here is we don't have to take anybody else's word for it. We just want the facts, we don't need the fluff. So you come in here and you can do things like sort this list out by safety. And then you're really going to be dealing with some stocks that are poised very, very nicely to take advantage of what at some point will be some good stock market gains. So you're going to have NVIDIA, Apple, AMD, Microsoft, Google, but there's going to be a few stocks in here that you may not be nearly as familiar with anymore, like a Micron, who's had some really nice movement here as of late. T-Mobile, Tencent Holdings, Alibaba. So this will be a great list to work from in the future, okay? Particularly for folks more on the prudent to conservative side. And so just wanted to give you some guidance there. I realize that it may not even be complete, but for sake of time, I'm trying to best give you the solutions without getting stuck in the malaise of other things that we could be talking about, okay? So with all of that, let's move on. A terrific tactic to get you started in the right direction if you can't watch the market, or just knowing that the tactic itself is going to take care of a lot of what we've talked about in terms of follow through. This is a very important tactic, because what most individual investors or traders even don't realize is that quality risk management begins with order entry. When you step into a market, it has a decided outcome on where you finish, right? You have an entry price and an exit price. So you need to make sure that you get good entries, good fills. And so buy stop limit orders become important. And so this is just a definition from Investopedia. It's an order placed with a broker that combines the features of a stop order. That's the most important part of it, is the stop. That order says stop buying at this price or below. Okay. And so what that means is price has to supersede it. It has to go above it in order to trigger, in this case, a market order. And when you attach the limit, that sets a price above the stop entry order so that you don't potentially pay too much. Okay, so it says here a stop limit order will be executed at a price specified or better after a given stop price has been reached, which we just covered. Once the stop price is reached, the stop limit order becomes a limit order to buy or sell at the limit price or better. And so that's kind of where that market phrase I said came into play, in that you'll never pay more than your limit, but you're going to pay somewhere between your buy stop and your limit price in kind of that window of pricing that you specify. The only coaching I'm going to provide here is don't get too cute with your limits, particularly on explosive days. The limit is there just to prevent what I would call a catastrophic fill, like a stock that gaps up 127% and the next likely move is lower, you know. So you just want to prevent that situation more so with the limit. The buy stop is the most important part, you know. Make sure you catch a rising stock. The limit is nice just to make sure you don't get some kind of weird fill. So typically, you know, 50 cents to $1, depending on price range. When you start to get up into the $400, $500, and $600 stock prices, you know, there are still some out there. Don't get that cute, you know, just use several dollars, or, you know, don't get yourself out of a bad opportunity by limiting too much, is the main message. You got to use your own judgment there. But this is an example of how it works. So we had a market that was coming down, down, down. Here we have kind of a nice reversal day. And, you know, we don't really know how good that day is going to be till it closes up, right? So it opened the next day. And this would have triggered an order, though, off of the prior session had we witnessed the hammer, had we witnessed the high price for the hammer and said, hey, look, I don't want to buy this stock unless it goes, you know, 12.5 cents or 12 or 13 cents above that high price, which it did the next day. Okay. But that same tactic could have even been done on the high price of this candle, where some of you would have been a little bit more sure that, you know, an order looks to be in order here. Sorry for the play on words. But, you know, simply put, we like to use the high price when we're just doing it on a ad hoc basis here, not to a defined technique. So 12.5 cents above a high, you know, make sure that the stock price is doing what you want it to do, and that's rise when you catch a fill. So it would have done it on this bar, as we indicate here. It would have done it on the next bar. It would have done it on the next bar. And so far, so good, right? Prices continuing to follow in that direction. And that's what we're trying to achieve. Okay. So the high price there was $48.97. We could have used the 12.5 cents in anticipation, or actually seeing limit up in the futures and knowing that if the futures continue the next morning, quite strongly, that we'd be willing to float an order out there. But this would also work in situations where even you receive a confirmed up call and you want to be extra sure that the stocks that you're going to buy are continuing to rise. You know, you might even just go off the closing price at that point, but something to indicate that prices are going higher the next day. Okay, so hopefully I detailed that cleanly as well. And then finally, I've already showed it off a little bit, but hopefully a smart, dynamic, customizable stop loss is something that you'll consider. You know, we have something at VectorVest called ProfitLocker Pro. It's a patent pending stop loss that we have, and it's really just amazing, guys. I've seen an awful lot of stuff. I use it myself religiously in a variety of different ways, and it can really do wonders for you. So here again is another example. So here is a situation where we could have considered buying AMD on this day here, where the light blue line starts. That's your stop. Okay, so this day here, and things actually go a little south on us before they start going north, and ProfitLocker Pro did a very nice job of managing this trade. And what we'll see here is as price goes up, so too does your stop loss. Okay. What we'll see next is once profitability is achieved, it kind of just holds the line there for the most part, letting the stock have some wiggle room so where you can get on the other side of that thing and stock price continues higher, in which case stop ProfitLocker Pro price continues higher. And, you know, doesn't continue higher when the stock price was kind of falling there a bit, but reignites and then eventually stops us out near the target. It's a terrific, terrific, terrific stop loss. I've never seen anything like it, and I'm so thankful we developed it because it is dynamite. You might be wondering then, okay, well, how do I use it? You know, and so with ProfitLocker, you know, what you do is you just put in a stop loss percentage and a target percentage, and it does the magic for you. With ProfitLocker Pro, which is an add-on, you know, we're going to have a free trial available to it today in the VectorVest views. But what it does is we've taken the time to develop templates that you can use based on your investor style or temperament. And so in this case, you know, if I'm speculative, if I'm just going to throw caution to the wind and start buying stocks here because I think the market has bottomed, you're probably going to need a decent amount of wiggle room to try to be successful. And so you can see in this graphic here that assuming linear price direction, which is a big assumption, but to best show the kind of the parabola or the curve, you know, it's going to have a lot of wiggle room. Okay. So that's, you know, we've pre-programmed some templates that will look out for you in what we feel are the best ways possible. Whereas the aggressive investor, we need, as we saw, sometimes our timing is very quick. We need a little bit more responsive profit loss curve. So you can see the red line is very much closer to the price direction of the stock here and accelerates faster and so on and so forth. With the prudent investor, you know, you kind of get a nice little feature here on this stop loss where it trails up faster and even above profitability before it levels off. And so prudent investors, you know, we kind of want the best of both worlds. We don't like to see gains that we have go away or anything like that. We just want to make money, you know, it's all the time, right? And so this stop loss should really do the trick for you in a big way. And then what might be mind-bending to some is the conservative one. It looks a lot like the speculative. It actually is different. But without getting too much into the detail, you know, conservative folks aren't looking to trade all that often. And so here again, you're going to have a rather wide berth to the belly of the trade where you're going to be collecting dividends and you're going to be writing options and collecting income and so on. So this is a terrific thing for all investors and traders out there. And so just quickly to detail it, if I go back into portfolios, say, when you decide what scan you're going to use, you know, up here on the right again, you have your genius. So if I come in here, I'll show you what I did. There was no timing here because this was, hey, we have the explosive day, you know, so I'm going to take a bottom fishing search, see how it does. And when I put the system together, then there's no timing, but we program in the search, right? And then there's a tab next to the what search am I going to use tab, right? There's a stop criteria tab, and in there is where I selected ProfitLocker Pro. Actually chose the speculative one here because, you know, on that day there was a little bit of speculation. Reality is might have done better with the aggressive one, you know. But anyway, that was the choice that was made, and it so far has worked pretty well. The thing that I don't love as much about this, you know, at this stage would be there could be some good give back on some of those stocks that are up nicely, you know, but it is going to work to lock those profits in. So, you know, we're in good shape. All right, having said all that, then just some basic money management that we went through earlier. 10 positions, not replacing stocks that are closed out. All those things start to become important. All right, let's not let some of these details get in the way of the message. So in summary, we're starting to see signs that the market may be on the rise again. There has been opportunity only really for the aggressive investors and traders so far. We'll see how the rest of today goes, but looks like prudent folks are looking more towards the middle of next week, and then conservative, we still may be, a few to several weeks away from any kind of signal there, and maybe longer, who knows. So let's all hope for the best, and now we know what to look for. One final thing. We have, now I know many of you have time on your hands. And so I'm going to get on my soapbox here a little bit, and I'm going to say, look, we got courses out there that are dynamite and they're not expensive. The Successful Investor course is going on right now, or its sign-up period is on right now, and will be starting next week, I believe. So this is your opportunity, guys, to sharpen the saw. And if you really want to make sure that you've learned all that needs to be learned in terms of using VectorVest in its very basic form, this is the course for you. And this is your opportunity to learn how to consistently make money in the stock market using VectorVest. And so again, in VectorVest Views, there's a link to a very nice presentation that'll really cover what the Successful Investor course is all about. And I strongly encourage you. I'm going to put my rubber stamp on it anyway. This is a course you cannot afford not to know the content of. So I would at least watch the presentation, period. And finally, final thing, I promise, there's no more and more. Our mission here at VectorVest is to provide the best stock market guidance available anywhere at any price. And having worked here for nearly 20 years now, I believe that we do that, and I hope you do too. And we'll see you right back here next week at VectorVest University. See you then.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.